Hey, what's up, guys, and welcome to Blue Collar Money Manager. So it's no secret that the past few years inflation has really taken off, with the price of pretty much everything skyrocketing. And this inflation is due to an extended period of low or no interest rates, and basically the Federal Reserve printing money like it's going out of style. But there's one product that really stands out, and that is car insurance premiums. So car insurance premiums have increased roughly 26% from 2023 to 2024, which outpaces the overall average inflation since 2020 of roughly 19%. So this is the largest increase in car insurance premiums since the 1970s, but why is this? So the first reason car insurance premiums have gone through the roof is mainly because of the ever-increasing costs of these new modern-day vehicles, and obviously the parts to repair these modern-day vehicles. Just for example, my 2022 Ford truck out in a driveway has $3,500 LED headlights. $3,500. So that means if I were to get into a basic fender bender, that could run my repair bill up to the 5-digit range. And obviously these big insurance companies know about this, and they price it into their insurance premiums, which is why we're seeing such an increase. But it doesn't just stop with the new car prices and the new car part prices. It also, rolls downhill to the body shop mechanic, having to be paid more since 2020. Their expenses across the board have increased as well for that body shop. So obviously those expenses are going to be rolled to the consumer, which is then priced into the car insurance premiums. So another reason car insurance premiums have gone through the roof the past year is because it's taking longer to make the repairs on these modern day high-tech vehicles. And this could be because of the high technology, like I said, with the multiple cameras, all the backup sensors, the wreck avoiding sensors, then the lane stabilization sensors, and this and that. It takes a lot more time to make these repairs on these complex vehicles. But it could also be because of the parts it takes to repair these modern day vehicles are taking longer to come in from the factories. Much like we saw during the pandemic, I don't think this has changed very much. And obviously it's no secret that if your vehicle is taking longer to repair, well, that means the insurance company, most of the time, they're going to have to shell out more money to get you a rental car for that time period. I mean, if you think about it, a basic fender bender used to take, a week to make the repair on? Now I've heard stories of it taking 6 to 8 weeks or longer to make these repairs, these complex repairs on these vehicles. And that means the insurance company is having to shell out extra money to give their client a means of transportation. And obviously, if the insurance company is shelling out money, they're going to roll that right into the consumer. They're not going to lose money. End of story. So another reason car insurance premiums have gone through the roof the past year is because of the high break-ins and high auto theft we've seen, obviously, on the news here recently. Now, this is more area dependent. However, nobody is immune to it, right? We've seen how a lot of car insurance companies have moved out of the state of California for this reason in particular. But let's face it, like I said before, car insurance companies and insurance companies in general are not going to lose money. So they tend to price in the risk when it comes to every policy they write. So sadly, if you live in a state like I do in Mississippi, we are required by law to at least carry liability car insurance when we're on the road. So sadly, there's really no way to avoid the high car insurance premiums. It's one of those things you have to buy if you have a car. But if you are unhappy with paying these high car insurance premiums every month, you have a couple of options. Option one is you go buy a 20-year-old car that's only worth like $5,000. And obviously, since the car is not worth that much, insurance will be cheaper on it because it doesn't cost that much money to total it out. It's not a $70,000 Tahoe, it's a $5,000 Civic. And another option is to pay off your car and just get liability insurance, which you are accepting that risk. If you were to wreck it on your own power, obviously you will have to pay to fix your car. So there's certainly risk there. And you can't do this with a car loan. Most banks and credit unions require you to have full coverage on your car if they have a loan on that vehicle. They want their collateral 100% if you were to get into a wreck. They need to be able to pay off that loan, basically. So in summary, I just don't see car insurance premiums ever going down. Obviously, let's face it, new cars are only going to get more and more expensive as the years progress with the technology and added government regulation on these gasoline and diesel vehicles. And that means the parts to repair these new modern day vehicles are only going to get more and more expensive as well. And especially in the inflated world that we live in today, everybody's fighting for higher wages. they're only going to pay body shop mechanics more and more, unfortunately, and that's going to be rolled into the cost to make repairs, which is going to be rolled into your car insurance premiums. So I highly suggest that you have flexibility in your budget for these variable expenses month to month, and don't let it, bankrupt you just because your car insurance premiums went up 1 month. Plan for the future, save money, have an emergency fund, and just don't let it ruin your day if your car insurance went up $5 a month. Anyway, I really appreciate you guys watching the video. Please like and subscribe. I got 2 subscribers last week and I was super pumped up about it. I'm just a middle-aged 30-year-old man here trying not to play PlayStation and want to make some finance videos instead. So every like, every comment, every subscriber means the world to me, and I really appreciate it, and I'll see you next time.